Right now, we're going to talk a little bit about the housing recovery. You know, we've been hearing news about the housing recovery, fits and starts, but one area where it's still really bad is the foreclosure situation. As a matter of fact, Chicago Magazine is coming out with a series that talks about the foreclosure situation here in the Chicago area. And so there are areas that we don't hear a lot about, and that is low-income areas. Well, one organization that's been helping out and offering a profit for investors is the American Homeowner Preservation Project. Now, last month, AHP got a reboot. The program is based on crowdfunding from private investors to purchase low-cost underwater loans and reset the terms to a more affordable rate for the current homeowners. AHP founder Jorge Newbery says the program provides positive returns, not only socially, but financially as well. He joins us on the line. Also with us is Chicago Magazine deal estate columnist Dennis Rodkin. Gentlemen, welcome.
Hi, good morning.
Hi, George.
Hi, good morning.
George, I want to start with you. You started this, in 2005, 2006. What was the impetus for this idea?
This was, actually, we started in 2008, and this was the beginning of the housing crisis. And we were originally a nonprofit with the mission to keep families in their homes. Many families at the time and still today maybe owed $100,000 on a home that was now worth $50,000, and that was created a significant predicament for them. And in addition, many a times they had started out with low teaser rates, which were now increasing, and so the combination of the values dropping and the payments increasing created a very challenging situation for many of these families, and we would help them, or we would attempt to help them one by one in going to their banks to try to agree to some solution to keep them in their homes. And the reality is many of the banks were not very cooperative, and some of these would go on for a year or two. They'd request more and more documentation, and most of the times it didn't work. We were able to help about 10% of the families that came to us for assistance.
Dennis, how unique is a program like this? Are we seeing small efforts here and there when it comes to this?
You know, Tony, it's interesting that, yes, there are small efforts here and there, but there are also enormous projects not to keep people in their homes, but to buy up foreclosures. There's something I'm looking at right now that I will have a story out on soon, is there are at least 2 investor groups that have bought over 500 homes each in the Chicago area.
Well, we talked about the Sam Zell back.
The Sam Zell, yeah, that's another one entirely. But these are investors buying up the dead loans, buying up the foreclosures. What's different about what Jorge Newbery and American Home Preservation is doing is their whole mission is to keep you in your house. They don't wait until you've been booted out and the house is boarded up. They work with you to keep you in the house, which is not unique, but very unusual. And the fact that they're doing it in a way that investors can also turn a profit is unique. Yeah,
talk a little bit about the investors, George. Where do they come in, and how is it that they benefit?
Here's how we've structured it. An investor can go online to our website and invest anywhere from $10,000 on up. And if they invest it for a year, they earn a return of 9%, 2 years, 10.2%, 5 years, 12%. So these are above market returns, especially compared to bank CDs or something like that at 1% today. And so it is a good return, and it's simply achieved by the fact that we can buy, using that same example, a $100,000 loan secured by a $50,000 home. We can buy that loan for $20,000 or $25,000, and so we can earn a good return, while at the same time dropping payments for families to keep them in their homes. So it sounds cliche, but it's a win-win for both the investors and the homeowners.
Yeah, and you know what's nice about it, Tony, is this is sort of trying to head it off at the pass. We know, you and I have talked about this repeatedly, the number of vacant homes in Chicago and the fact that they sit for a very long time, and they tend to bring down the rest of the neighborhood, not to mention what happens to the people who are foreclosed, who may shift to somebody's couch, somebody's basement, homelessness, that sort of thing. What this organization is trying to do is stop all that before it happens. I'm a low-income person. I was mortgaged to the hilt or beyond that level during the boom. the value of my house has dropped so far and it is the only asset I have, I'm very likely just to walk away. Enormous numbers of people have said, I can't do this, and they walk away. The idea here is American Homeownership Preservation buys that house, buys the loan, I should say, at that enormously deflated rate, rents back to me at that level, works with me, works with my credit, all that sort of thing. I stay in the house. This house stays occupied. The neighborhood benefits. And as George was saying, the investors benefit as well. Okay,
so George Newbery, you say this is a win-win-win situation. How are you picking the homes, the mortgages? How do you determine who the lucky people are?
Yeah, it's homeowners call us frequently and say, hey, can you buy my loan? And the reality is we can't. We have to go to Bank of America, GMAC, and ask them, and they tell us, hey, we'll sell you these 100 loans, but they choose the loan. So then we buy 100 loans or 200 loans or whatever it is, and now those are as you put, the lucky families who now we can reach out to and say, hey, your payment was $1,500. We can keep you in your home for a payment of $500. If the home is vacant already, we'll give you $1,000 to sign a deed in lieu so we can avoid a one-year foreclosure process and put that home back into use, trying to avoid the more and more vacant homes in these neighborhoods. So it is a random, it's the bank selection, and that's a little frustrating because many times homeowners will call in and say, can you save my home? And we know they want to stay their home. Upon a rare occasion, we have been able to have a homeowner who called. In fact, we had one who emailed us about 3 or 4 weeks ago, and we knew the bank who held their loan, and we were able to contact them, and they did actually sell that one loan, but that's a rare occasion.
It's the morning shift here on WBEZ. I'm Tony Sarabia. That is George Newbery. He is a founder of the American Homeowner Preservation Project, trying to do just that, preserve homes so people don't have to be kicked out and they don't get foreclosed on. Also here with us is Dennis Rodkin. He's the real estate columnist. So, Dennis, what's behind the strategy of banks picking and choosing which loans that they want to get rid of?
Well, it's interesting. George and American Homeownership Preservation are working at a level of the market where the banks don't really stand to do so well. If your $3 million house is foreclosed and the bank can walk away with, say, $1 million on that, that's interesting. Or even, let's say, your $500,000 home and the bank can get $100,000, $150,000. That's interesting to them. These are homes that were probably really not worth what they were mortgaged at during the boom years. These are homes, the average in this portfolio that the group is trying to buy right now is a $60,000 mortgage. Those are extremely, and they're in neighborhoods that are in trouble, and they're places where the banks think, it's going to cost us more to foreclose on you, get you out of the house, board it up, follow the rules that the city has for managing foreclosures, and then resell it. So let's just give it to American Homeownership Preservation at this discount rate. It's sort of their specialty, their niche. They'll get it moved.
So it sounds, George, that anything above that, that's where the banks will sort of hem and haw and maybe not be willing to cooperate?
Hem and haw, or they'll simply sell them to someone else who's willing to pay a greater price for them. And a lot of hedge funds and whatnot buy these loans as well, and they'll pay premiums when they're in in higher value suburbs. And this has just become our niche. It's where we can get the greatest discounts from the banks, but as a result of those big discounts, we can also deliver the most transformative solutions for the families whose loans we purchase.
Because let's just say these are in the locations where you really can say people are hurting the most.
Right.
Not only because there's a larger concentration of foreclosures, but because I'm a low-income person. I don't have also a portfolio of stocks or a 401k or whatever else it is. When I lose my house, I've lost everything. So if they're keeping me in the house, they are working with the people who are the most distressed.
George, I mentioned at the top that your program got a reboot talking about crowdfunding. Briefly, tell us a little bit of how that works.
Crowdfunding, before this reboot, 2 months ago, you call us and an investor say, I'd want to invest in American Homeowner Preservation. We operate a hedge fund where the minimum investment is $250,000. So a fairly significant hurdle. Even if you have the money, it's still a big chunk of your portfolio potentially going into this one project. Now you can hear about us and say, well, this sounds interesting. I can put in $10,000 to start. That's the barrier to enter has dropped dramatically. And our expectation is a lot of investors will maybe put in $10,000 or $20,000 to start, and then see it works out in 3 months, 6 months. Maybe then they start talking about putting in a larger amount. But we think it makes it a lot more marketable to investors because the starting point is so much lower than it has been in the past. And it's customary for hedge funds to have $250,000 minimum investments. But the crowdfunding solution or platform enables investors to make much smaller investments and participate and get these good returns that oftentimes hedge funds or strategies such as this can offer. One big note is that as of September 23rd, it was the first time that hedge funds can advertise. The large SEC changed the law, and so now hedge funds, private companies can now advertise for investors, even talk on a radio show such as this. In the past, we'd have to be much more general. Now we can be, hey, we welcome investors. Before we couldn't even say that.
Okay, so your goal is to raise about $5.5 million by mid-November. How's that going?
It's gone. We have about, on our site, I think it shows about $1.5 million that's been processed. There's about another $1.5 million that is in process. Many investors will commit the money online. Then oftentimes we have to get paperwork signed and verify the accredited status of the investor. So there's about another $1.5 million. And then there's actually some institutional investors who will probably put in about $2 million, and we're working with them. And so we're hoping we have this done in the next week, 10 days.
George Newbery, the founder of the American Homeowner Preservation Project. They are raising money to buy about 250 distressed mortgages. And just giving us an update on where that's going, Dennis Rodkin, the Deal Estate columnist for Chicago Magazine. Thanks to both of you for stopping by.
Happy to.